Bitcoin is back above 70,000. In fact, it's back above 71,000 American dollars. I thought that it was supposed to be crashing, that it was correlated to global markets where we're seeing historic downside in stocks across the world, not necessarily in the United States, but the Korean stock market officially crashing, the stock market in Abu Dhabi crashing. Markets obviously have no idea how to react right now to the conflict in Iran, but Bitcoin doing what you would hope Bitcoin would do and rising and showing some small qualities as a safe haven asset. We're going to dig into that and everything happening today with Aya Kantorovich. Let's go.
Let's go.
Good morning, everybody, and welcome to the show. I hope that you're all having a wonderful Wednesday and that wonderful Wednesday will continue along through this show. I'm going to go ahead and bring on Aya right now. Good morning. How are you?
Good. How are you doing? A lot better with these prices.
I was just going to say, when you wake up and you see this, which is maybe unexpected because like it feels like it's been 100 years, like the lady from Titanic. It's been 84 years since we've seen price above 70,000 for Bitcoin. I know it hasn't been that long, but it seems like sentiment is still in the dumps and people are pleasantly surprised when you see this.
Absolutely. I mean, look, to your point, we are down 47% from all-time highs in October of 2025. And so we've been range bound in this like 60 to 70 range, and we want to break out of it. And so I know you mentioned earlier, it's trading like a macro asset. Everyone's been trying to say, is it a safe haven? Are we highly correlated with macro? What's the correlation with oil and the war in Iran? And we're just trying to figure out what that narrative is right now.
I still continue the argument, which I made again on X this morning, that's been pretty much uncorrelated. I mean, listen, we get all the downside of bad news for sure when it happens, but we don't, it hasn't trailed stocks to the upside. It hasn't trailed gold to the upside. And if you want to be uncorrelated, sometimes that means things look pretty bad for your asset when they're good for others. And that's terrible when it's happening, but you still want to be uncorrelated. And right now, you don't really have many things pumping, and Bitcoin made a big jump, right?
Right. Without a doubt. Look, you had the story, previously when we saw the massive drop in Bitcoin price because of the, over-levered Hong Kong fund that had to delever their Bitcoin ETF positions. We're seeing like different narratives of, macro funds that have some level of exposure where they have to, again, constantly sell out of their risk assets, which tend to be crypto. So to your point, Scott, the lows are much lower and the pain is much greater with crypto assets being those risk assets. The other narrative that people are keeping a very close eye on is US regulation. There's a lot of really positive stuff coming out of, the Senate and the House. I mean, the Senate's trying to pass, the Clarity Act. They're getting a lot of bank lobbying. We really hope that's going to pass. CFTC just said that perp futures is going to come to the US this year. I mean, these are huge headwinds. And so the question is, can we get it over the finish line? And then what's going to be the catalyst for Bitcoin price?
Yeah, I agree. I mean, so just looking at the way this is kind of being reported, Bitcoin jumps above 71,000, building on its resilience to Middle East conflict. And of course, we have sort of, the back half of the title, while stocks crash. Well, they're not crashing necessarily in the United States. I would say they're actually pretty flat. But UAE markets reopen after 2-day shutdown. Dubai, Abu Dhabi stocks tumble as Iran war shock hits investors. And then panic sweeps Korean stocks and biggest one-day crash on record. So yeah, we're kind of flat in the United States if you take a look. But everywhere else, down 3.5%, 3.8%, much bigger. So I think maybe it's sort of dependent on your region or your market as to how things are reacting right now. But
Right.
Bitcoin is seeing the biggest bump.
Right, 100%. And look, everyone's talking about oil, right? I would say the narrative of the week is oil. Are these oil tankers going to be able to go through the Strait of Hormuz? You have President Trump saying, yes, we're going to, use the Navy in order to help those tankers go through. You have other geos saying, no, there's no way that's going to be able to happen. And so you're seeing that dichotomy between, different market prices. But I think what's also very interesting is despite the fact that you're seeing persistent ETF outflows, we've actually seen a lot of whale accumulations of Bitcoin in the last 30 days. So I think last node said it was roughly 270,000 Bitcoin were accumulated by whales over the last 30 days. And so that's very positive. as well. But yeah, 70K is that resistance price. And the question is, can we break out of it?
Yeah, that's really interesting because obviously the narrative of the entire downtrend since October has basically been whale selling. And the
Right.
fact that we have whale buying, and then for the last couple of weeks, it was massive outflows in ETFs, and now we have 1.5 billion in inflows in 5 days. So clearly, we've seen a switch in the boomer markets. I think, as Eric Balchunas calls it, there. Another solid inflow day for the Bitcoin ETFs. Almost all now net positive flows year to date. Amazing considering it's down 22% on the year. 50% total decline. Crypto trader, call your parents, tell them thank you and that you love them, that you totally underestimated their hands. In other words, that the boomers have strong hands here. But I mean, these flows definitely, I think, kind of just track, price going up and down or reverse. I'm not even sure. But either way, this narrative that the huge players have been selling seems to be reversing.
Yeah. And look, the other thing I would say too is there are a bunch of high frequency traders that now hold this Bitcoin ETF and crypto ETFs. And we always talked about what happens when institutionalization comes along. And what happens is you get a lot of volatility in these prices because you just have systematic trading firms buying and selling these on weekends when, markets are closed. And so I think what was, from my perspective, very fascinating was Bloomberg over the weekend was quoting oil prices from Hyperliquid because the oil markets were closed. I mean, that's crazy. And so, if you are the, NASDAQ or any of these trading platforms that's closed on weekends, you're probably trying to accelerate the ability to be able to trade those assets 24/7. And then from the perspective of, the high frequency traders, you still want to be sure that you're, not exposed, you're hedged, ahead of Monday market open. And so that's where you're seeing all that vol. But, for anyone that's holding some of these assets in their wallets, like you said, it's definitely painful, right? Because the swings are really big swings because you don't have any other assets or markets that are open at that time to be able to hedge with.
It's interesting because now that we're seeing reports, that markets are going to be going 24/7, 365 around the world.
Right.
Like all
Right.
my fun friends are shaking in their shoes, right? How are they even going to do that? Because Sunday afternoon.
It's coming. It's been coming. We've been waiting for it for a while. We want everyone to feel the pain of 24/7 markets the way us crypto folks have been feeling it for years. We're all tired. And it's time for everyone else to be tired too. But look, FX has been trading almost 24/7 for years, right? And so I think at the end of the day, it's just a matter of time. And realistically, why should banking hours or holidays restrain people from being able to trade? There's really no reason for it. And so, it's time to get those operations fully 24/7.
Oil prices being quoted on Hyperliquid. I was unaware of that. And that's just mind blowing to me.
By Bloomberg in the terminal. It was, it really blew my mind. And it's just awesome to see because it really sets the stage for the fact that one, Hyperliquid is now, where there's so much volume on tokenized equities, tokenized commodities, oil prices. And so it being used as a reference asset means it's an institutionalized platform. We know a number of very large HFT shops that are looking to start trading on Hyperliquid, and that's very competitive to some of these other platforms. And so if you cannot meet the 24/7 demand, you're just going to be left behind, and those volumes are going to rotate over.
Hyperliquid. I'm blown away. So obviously, you were at Falcon X forever and pivoted and created August. So you've been very deep in DeFi. Right. So I guess I have a lot more news I want to get to. But speaking of Hyperliquid and 24/7, 365, obviously, blockchain rails and crypto are superior to the legacy systems that we're seeing in this downturn. I'm assuming you guys are seeing more building and interest than ever. Right. I keep hearing it. Right. Prices are down, but, build in the bear market.
Yeah, it has been, I've never seen so much demand as we have seen in Q1 of this year. Our top of funnel is insane. And there's a few categories where I would say there's a lot of institutional interest. The first is if you don't offer crypto trading, you're behind. And so all of these large, platforms, asset managers in traditional finance are trying to acquire companies right now to be able to offer those products in the next quarter or two, and especially by end of year. And so that has been so tremendous in the adoption that we will absolutely see a lot of M&A happening this year. The second thing that we're seeing is, we have a company called Upshift. It launches vaults. 2026 is the year of the vaults. There's no question about that. And it really is, the ability to tokenize anything and offer yield. All of these platforms have significant idle float, so just stable coins sitting around. The treasury yield's going to continue to go down. And so they're really looking at, how do I create some sort of yield for these users on my platform, and then how do I charge a spread on top, right? And so we are seeing every single exchange, neobank, wallet provider, whatever it might be, offering earn. Earn is back, and it's back in the form of a vault. And a vault is really just back office, middle office, all combined into a very seamless smart contract. You don't even know that crypto is operating on the back end. It's cheap. You can, set it up in a few clicks. And so the amount of things that we're seeing that are getting vaultified is truly tremendous. And yeah, I would say it's quiet because everyone's heads down building. There's going to be a lot of big announcements that come out in Q2. And so, hopefully going back to pricing, that's another tailwind or headwind, for those prices.
So we've kind of casually mentioned vaults here a few weeks ago, and all of a sudden it was like a 1 week narrative, right? And it seems that this is actually where everything is going. Yes. At least on the institutional side. So maybe like just the TLDR really quickly on what they are and how they're going to be used, just for those who may have missed it.
Yeah, absolutely. So, the best narrative that I've heard being used is, if you think about DeFi, you originally had lending platforms like Aave, DeFi Blue Chip, and the way that those operate is that you had users post collateral into a pool of assets and then borrow loans against that. And so you didn't really need vaults at that time. Then you had Morpho come out with isolated markets. And so you would post a specific collateral and then borrow against that specific asset. And these isolated markets created hundreds of lending pools. And so, Morpho then launched vaults, which is a way to aggregate those lending markets into one place. And, that was then born in this sort of yield aggregation. Now, this wasn't just born with Morpho. This happened back in the day with Yearn Finance and some of these other, DeFi OG blue chip platforms that have been aggregating yield for a very long time. Now, Vault is really, you can aggregate any sort of yield. You have this tokenized receipt token, and you can use that to make it composable. You can use that as margin. You can use that anywhere, really. And I would just think about it as, the aggregation of underlying yield assets for a very seamless user experience. And
it makes everything a yield asset, and you can consolidate those yield assets into basically a single token or portfolio that you can then go earn yield on.
Exactly. And you can think about it in the form of ETFs, index funds, VC funds, hedge funds, tokenized equities, in indexes of equities. I mean, the possibilities are truly endless. And so now we're seeing people try to use it in private credit funds, in, instant redemption facilities, credit facilities. I mean, the ideation is just so high because at the end of the day, it's really just accounting mechanisms, right? And then the ability to make it composable. And so you can use that for so many different use cases. The adoption is endless.
Okay, so you're obviously building these and are deep in DeFi. Who's interested in it right now? Obviously, I think there's a retail element, I'm sure. But what kinds of institutions are going to be looking at this? And is this the sort of thing that's going to be, adopted by the BlackRocks and the JP Morgans, and is somehow going to be a product that they'll eventually be offering as well?
Yeah, so I would say, everything comes in waves. And so the first wave that you'll see is, call it the crypto native institutions. And what I mean by that are, all exchanges are going to launch Earn before year end, all of them. And so you saw, Kraken's Earn get deployed. That was their retail specific Earn. They've also launched Kraken Institutional. And so you're going to see all exchanges launch some form of an Earn vault or yield aggregation vault that may be on their native L2, may have their native assets as their deposit asset, and so forth. The next is going to be the neobank. So think the Robinhoods, the Revoluts, those are all going to happen before year end. And again, specific to, whatever chain they may have, whatever assets they may have, but very specific to their ecosystem. I would say as it pertains to the institutions, the first wave is going to come with the custodians. So thinking through the State Streets. Anchorage is kind of a crypto native custodian that also touches institutions. They are also talking and thinking about vaults as well for digital asset treasuries and some of these other, publicly traded firms that want exposure to yield aggregation. And so I would say those are kind of the three main buckets that are at least going to happen before year end. But, there's a lot of FOMO that takes into place with some of these, larger players where, if you see one qualified custodian or one custodian more broadly launch a vault, it means the whole, competitive team now has to look into it very quickly. And so I think by year end, you're going to get a lot of that competition heat up, which means that next year, at least for these, as you mentioned, some of the other institutional players, banks, that will then happen. We do need to have clarity and Genius pass before that.
It's crazy.
It's crazy.
Honestly, as I hear it, because it just does not match once again sentiment and how people are feeling about this. What's the risk with these? I think people in crypto still hear yield, and it's like a 4-letter word that gives them PTSD from the Voyager BlockFi Celsius days, right? Obviously, this is very different.
Yeah, 100%. I mean, look, at the end of the day, asset management is a very old industry. It was not born with crypto. It was not even born with some of the more recent like neobanks. It's something that's been around for hundreds of years. And so there's always risk with asset management where you have, curation that or a curator that, isn't hedging themselves. There's always loss of funds. And so really the big piece is what's the underlying asset and strategy and what are the risks? Is it something that's yielding 25%, 30% in a market where the average yield on stablecoins is 5%? How exposed are you to, recursive looping? How much of the yield is just airdrops and farming, points? And so I think that piece still remains. The difference between the BlockFis, the Celsiuses, and the Voyagers is that everything's on chain. And so the beauty of this is that you can really see what that exposure is and what you're exposed to. And, the secondary piece of that is because it's on chain, you're not seeing people lending against, Bitcoin ASICs or unsecured lending or lending to, a Three Arrows Capital, and
money that Voyager lent to Three Arrows Capital. Great.
There you go. Right. And so, the ability for it to be on chain gives you that sense of, okay, I have the transparency. I see what the underlying is. And that, by the way, is still better than, some of the TradFi products that even exist out there. I mean, I always talk about Archegos, but Archegos was Three Arrows, right? They posted the same form of collateral, multiple banks, blew up, took a bank down with them. And so that stuff still exists in TradFi. Moving it on chain means that you can actually verify that it's not going to happen again.
Yeah, you mentioned that we need to see clarity passed for the larger institutions to come in and participate. I think it's a lot of debate as to whether that's likely. Seems to be optimism when you hear about it in the press, but a lot of pessimism when you actually ask people behind closed doors as to whether this will get passed. But Trump is now he's making a push again, right? He urges passage of U.S. Clarity Act, attacks banks for undercutting Genius. He's very squarely putting the responsibility for this not getting done right now on the banking lobby, which I think is interesting and helpful. And he went on one of his classic tirades, here on Truth Social about this. I mean, I don't know what you're hearing. I'm definitely pessimistic that it's getting passed anytime soon. They haven't even settled on stablecoins, which is the next step before ethics and DeFi and all of these other things. And midterms are coming. But maybe you have a more optimistic view.
I'm right there with you. I think it's going to be very, very hard for them to get this over the finish line between now and July. But if we've seen anything with this administration is that they, have no shame in pulling all the cards to try to get these things done. And so, I think that we will see that pressure heat up on Truth Social, but also behind closed doors. There'll probably be sweetheart deals that are passed between, banks in order to get this over the finish line. So I wouldn't be surprised if you're going to hear and see a lot of deal making happening, over the next 2 months. But yeah, look, I think it's frustrating because we are so close to getting this level of adoption in the United States, being a leader for some of this crypto level regulation. I mean, this stuff has been passed in countries in Europe. And so, it's I think the bank lobby is a really hard thing to fight. But if anything, that should be more of a reason that we get this thing passed, right? And if anything, everyone should be calling, their representative to try to continue to put that pressure on, the bank lobbies and get this thing over the finish line.
I mean, I've seen some good takes that the banks actually need this legislation more than the crypto industry does to some degree, because there's a lot of things that they want to do and will need to do in crypto that they actually can't because there's no legislation. They just want to make sure that they have the power to do it and that the crypto industry doesn't, right? So there's got to be a happy medium there. But even, I mean, it harkens back to kind of the SAB 121 days where, they passed the ETFs, finally got approved, and all of a sudden Coinbase was custodying all of the ETFs because the banks literally weren't allowed to custody these assets. And that had to be rescinded when Trump came in to even allow the banks to do the job they wanted, which was to custody. So there were secondhand effects that actually hurt the banks because there was such sort of contentious legislation or lack of clarity. So the banks need this too, to participate in crypto and to do the things like this is bad for the banks if Vaults Advance and the neobanks and Coinbases and Robinhoods and are offering this yield in a safe environment backed by smart contracts. So the banks are sitting there on the sidelines offering you 0.5%.
100%. Look, they're trying to protect a moat that's going to disappear regardless, right? To your point, Robinhood just launched banking and the adoption numbers are insane. And, it is a very threatening competitor. And if it's not going to happen with someone like Robinhood, it's just going to get pushed offshore. And we've seen what that has done in the past. It doesn't make the United States a winner. It doesn't make it a leader. Right now, we're in a moment where the US is guiding a lot of, market movements and flows with crypto. Why would we push that offshore? And so I agree with you. I think, this protection of some archaic moat is absolutely not the way that the banks are going to win. But the bank lobby is the bank lobby and they need to make money too. So that's their play.
I mean, look at this guy, our favorite. JP Morgan CEO Jamie Dimon says stablecoin issuers paying interest should be regulated as banks. I mean, so obviously what did he say to Brian Armstrong? You're full of shit. In WEF, like the two of them, this is obviously heated up. They've kind of become the faces for the battle between the banks and the crypto industry on clarity. But I mean, this is just like classic protectionism of his, own industry. They don't want to be able to pass on the yield because that's the way they make money. But I think the deep irony of this is like Coinbase can't get a banking license or hasn't been approved for one. So he's basically saying you should go do something that you literally can't do, even if you tried. This is kind of like Gary Gensler saying, come in and talk to us.
100%. Yeah, that's exactly what it is.
He knows this is dumb. He's just taking a shot at us. But
I mean, look, like the team I wouldn't want to be working on is a JP Morgan crypto team, right? Because it must be really, really hard to be building technology for digital assets and crypto when the CEO of the firm is quite literally lobbying against it, in Congress. So yeah, it's the industry is very resilient and they will find a way. And there has never been a better administration that has pushed, this kind of regulation so aggressively. And so, look, I'd like to stay optimistic. We'll see. Maybe a miracle happens in the next 2-3 months. My fingers are crossed. But again, if you, are in the US, you're listening to this, call your senator. We can definitely put pressure on the Senate to get this passed despite the bank lobby.
And I think, interestingly, at the same time, when I say banks that the crypto industry can't get banking licenses, that's only partially true. We actually had news, which I think
Kraken, yes. I was going to say,
a banking license in Wyoming, so they already had a banking presence. There are different varieties of banks and what activities they can participate in, obviously, and they had basically the most basic level. But this is the first time, and this is what Caitlin Long's been fighting for at Custodia for years, that a crypto exchange / bank will have access to a Fed master account and will have access to Fed rails. Of course, this is that skinny bank account or license that Waller had mentioned months ago that everybody reported on. And this is being viewed as Eleanor, who was on the show yesterday, says this is kind of like the pilot, right? Kraken's getting the license to be the pilot. They're not going to have the lending service and a lot of these other things, but they will have direct access to Fed rails. And that's the first time that this industry has had that. Of course, I think going back to what Jamie Dimon's saying, that would be an OCC account and the ability to do yield and all these things that has very little to do with the Fed giving a master account. It's a different
Right.
regulator and system, but still it's a step in the right direction.
Yeah, 100%. Look, they've been working on this for years. And so, again, going back to the moment in time, there's never been a better moment, for crypto companies in the United States to get some of this stuff passed. But it's still on the tailwinds that, yes, we're getting this stuff passed. Yes, the infrastructure is getting built. Yes, people are getting hired. I mean, if you even look at, the rate at which crypto specific hires are being made at all of the, banks, Morgan Stanley, obviously BlackRock's expanding, Bank of America, I've seen, it's really promising, and the infrastructure just takes time, and it happens, the build happens quietly, but it's all still, if you think about pricing and taking a step back, it's still, in the shadows of, potential global tariffs that will have impact on pricing, and of course, what's going on in the Middle East and how long that plays out for.
Just a couple other stories I think worth noting. We have Morgan Stanley filed an S1 with the SEC for a Bitcoin Trust ETF, so another ETF. But this kind of goes back to what we were talking about with SNAP 121. BNY Mellon and Coinbase Custody are listed as custodians. Here's the BNY Mellons and the State Streets and the biggest custodians in the world finally getting to participate more heavily in the ETF game.
Yeah, I mean, look, I will say the BNY team has been so crypto forward and
even when they didn't have access.
Yeah. Exactly. And, hat tip to that team. That's a large organization, very bureaucratic. To be able to get some of those things over the finish line is exceptional. And so, yeah, they've done a tremendous job. We need more than just ETFs, right? We need trading capabilities. We need lending. We need cross margin. People want to trade tokenized equity basis. We constantly get demands from clients saying, hey, look, like I can trade tokenized basis on Tesla for like 15 to 20% yield. Obviously, hyperliquid perp volume is like called 5 million a day per ticker. But, I want to be able to do that in one account, capital efficient way. There's a lot of demand for this stuff. And so, yeah, it depends on CFTC approving perp futures. I think that's going to happen this year. We're going to see all of the like neobanks launch perp markets. And then it'll be interesting to see if Hyperliquid keeps that moat, So it's going to be spicy this year. It's going to be really spicy. But all of this really depends on regulation, right? And once that green light gets passed, it's going to be fun. It's going to be really fun.
Yeah, I mean, if the regulation doesn't pass, I mean, Coinbase is obviously in a great position themselves because they are offering rewards or yield, and Hyperliquid would have a huge moat, right? So, like, it's what's good for many might not be good for few.
Right. And to your point, they're all lobbying for or against it, as we speak. So, yeah, I mean, my fingers are always crossed that technology wins, and we have all the right pieces for the puzzle in place this year. And so it's going to be a really, really exceptional year if we get it over the finish line.
Yeah, and one of the biggest narratives, obviously, generally has been AI, but the crossover of crypto and AI, and I'm sure that you're looking at that very deeply in DeFi. I saw a story today that I found really, really interesting. Maybe I'll show Star's tweet first. Star's obviously the CEO, founder of OKX. With OKX on-chain OS, powerful AI meets on-chain infrastructure, accelerating development and unlocking new possibility for AI agents. Dug into it more deeply. I mean, this is really, really interesting for retail and for developers, et cetera. But like wallet, payments, trade, analyze, dApp, connect, and all these will work together. I mean, this is an example. Connect your agent to OKX on-chain OS. Swap my ETH to USDC if ETH drops below 2,000. You just say that to your agent, and your agent just does it. Right? No more even worry. I mean, this is going to be everything, right? I mean, we have all these conversations about all the things we're going to be able to do in DeFi. Are we even going to be doing them?
No, we're not going to be doing them. We've been looking at being able to, type out trading requests in AI for some time now. And I will say all of this is fantastic, but it comes with risk. And the risk now here is amplified when the user experience is simple and you don't have the parameters in place to limit, some of the potential risks of either, an agent going a little bit AWOL or, accidentally lever looping something 100 times instead of 10 times, or you putting in a fat finger request, which happens all the time. You accidentally say 1,000 instead of, one. And so these things have very large.
Or one of them just do that and send out like to hundreds of millions of dollars in Bitcoin or something.
It's possible. It's possible. And look, I've read some stories of people losing money because they just didn't have the right risks parameters in place. And so, look, I think from our perspective, we built tech where you can whitelist a number of functions, you can set limits on pricing, you can set limits on actions. And I think, I'm very, very excited in terms of the possibility for AI to make the trading experience better. And it will happen. And it's going to get to a point where you just text or call an agent and the agent, monitors it for you, executes a trade, monitors it for you, can unwind, etc. But those, risk parameters have to be in place because otherwise, the ability to fat finger is very high. I mean, you fat finger probably on Robinhood, once in a while, and that never feels good. And so you need to have those parameters in place, a review console and so forth. But even more on just the building side of things, we had kind of gone through a phase where I would say there weren't necessarily net new features or tools that were being built last year in crypto. And I feel like even in the last 3 months, I mean, it has been exceptional in terms of that growth of development. And so that has been like really, really, really fantastic. And I would say that, at least from our perspective, we're currently able to execute 30% more efficiently because of AI tooling. And so it's not necessarily that, it's replacing people, but it's just making our employees so much more efficient, so much better. And that's really fantastic.
Yeah, I'm looking at this again, and I was just kind of reading through it. But this has kind of been the big one that people have been talking about is that AI agents are going to autonomously transact, and they're obviously not going to be sending each other cash, right? So that crypto becomes the natural, monetary unit of account and for transactions in that world. But this is already here, like built on the X402 protocol. On-chain OS enables pay-per-use transaction that AI agents can initiate and settle autonomously. Right. So here it is. You give it permission to do things and it's going to use blockchain rails to do them. I mean, this is one of those things that everybody is positing will be the future of AI and crypto.
Yeah. And look, the OKX team is exceptional. They're ahead of the game here. And, to be able to launch that kind of product within an exchange of that size is phenomenal. So I think we're going to see a lot more of this. But yeah, like I said earlier, the competition between exchanges is going to be very hot this year with net new feature developments and launches. And so should be very exciting for users and for retail because it means at the end of the day, the best product wins.
So one more thing to talk about. One of our allies, getting a little bit pessimistic. I love these. I think these things are bottom signals, but Dalio was on the All In podcast and said there's only one gold. Of course, right when he said that and that came out publicly, Bitcoin went up and gold didn't. So, Bitcoin has a way of trolling people who say things like this, but he says it should not be compared to gold because it lacks central bank backing. Okay. No privacy and can be threatened by quantum computing. Quantum computing, where do you stand on that? And where do you stand on Dalio? By the way, he still has like 1% of his assets in Bitcoin. So it's not like he's given up. And I should say, like, just because somebody doesn't necessarily like my thing as much, I still think Dalio is amazing. I've read all of his work and, he's one of the greatest thinkers and investors of our time. But, he's kind of turning a little bit.
I have called Dalio a Mr. Doom and Gloom for many years. I've never seen Dalio post optimistic news. And look, doom and gloom sells, right? It creates headlines. He is an exceptional thinker. I will not undermine that. But, I will say it's always an essay on how the world's about to end. So, I think that's definitely not the narrative that inspires me or makes me think that, we're going to have a lot of technological developments. He's been wrong a few times in the past. And so hopefully this is another time, one of those times.
Yeah, doom and gloom definitely sells. And the quantum thing seems just nonsensical. I mean, I do think that quantum is theoretically a risk. I just think it's a risk to much bigger things than Bitcoin, and you can't look at it in a vacuum. I keep saying, like, if Bitcoin's in trouble, what about the nuclear codes and like the banking system? So
100%. Like I said, the doom and gloom list is endless, and so I'd rather think about product development than the other side of the spectrum.
Well, clearly we're good luck because markets opened, those other markets, and Bitcoin's over 72,000 now.
There we go. We should do this more often.
Nice to see a bit of follow through here. It's great.
Agreed.
Well, I know that you got to go now because you have more important things to do than talk about the news here on the show. Thank you as always. Everybody give Aya a follow, and I'll, of course, be back tomorrow for the next episode. Thank you very much. It was great.
Thank you, Scott.
Bye, guys.
I appreciate it.
That's dope.